Sunday night is I do a weekly outlook, and I normally go through some macro stuff that I've talked about on my Facebook or through MTC that week, just to, because it's hard to sometimes get all the information from a post, etc. So I'll go into detail with it. So I'll kick off the call with that as well. We then kind of start we look at market sentiment and kind of get the feel of what everyone's feeling out there. And then I start diving into the technicals as well. But, you know, if you followed me at all, you probably know that I've been pretty bearish on the macro and on the big primary trend. And I'm going to show you why tonight. So then it kind of makes sense as to why I've led that way. And I think the important thing to keep in mind is this is all stuff that I discovered at the end of 2021. So it wasn't when everyone was bearish like they are now. This was stuff that I'd seen back then, and that's why I'm sticking with it. And that's why I believe that primary trend had changed. And I'm going to show you that tonight. So that's the big picture. And then what I learned from the CFTE course as well was that always want to do a top-down approach. So you want to look at the big picture, and then you want to go down and down and down and down and start looking at the little picture, because there's no point being bearish sometimes on the, you know, the 3 monthly or the yearly, but for the next 3-4 months, it's going up, because as we know, markets don't go down in a straight line. They don't go up in a straight line. There's lots of zigzags along the way, and there's plenty of money to be made as well. So let's get cracking. Just a reminder that everything in this video is factual information only. It's not intended to be financial advice, and yeah, it shouldn't be taken as that either. So I want to start off with this because Jesse Livermore is a famous TA titan. You know, Wyckoff and all that. He actually based all of his work on Jesse Livermore. So if you don't know of him, he's an absolute TA titan. And yeah, one of his quotes was, "There is only one side to the stock market, and it's not the bull side or the bear side, but the right side." And I know a lot of people think I'm a perma bear or etc., but I'm the furthest thing from it. I was actually mega bull all throughout 2021. I started to get a bit cautious towards the end. And then it's only when I saw what I'm going to show you tonight that I started to go, oh shit, I better maybe start adjust and look for that downfall. Even on crypto, I'm mega bullish on crypto in the long run. I just believe that we've got a cycle top right now, and that smart money will make it look like it's dead to dumb money. And then I believe we're going to have massive gains from there. But again, it's what I'm seeing, but I also know where I'm going to start to flip back bullish on the long term as well. And I'm going to show you that tonight as well. So yeah, just so you know, I'm not a perma bear at all. I'm furthest from wrong. The only reason I have a bear as my profile picture in the first place is just to keep me on track, because whenever I start to get that little bit of bullishness again, which is often when we're kind of near the peak of a correction, it just reminds me, hang on, Dave, you've discovered this before this even happened. Remember, and until I have that confirmation of it changing, I stick with my analysis that got me as far as it has today until then. So we start off the call with sentiment analysis. So we always go through, first of all, we look at the stock market, and then we look at the crypto. And if you look here, the week ended on 24.1 and the historical average is 37.5. So it is quite low compared to the historical average. But again, the average, you know, most of the time we're in a bull market. So we haven't been in a bear market. So yeah, it is low, but it's still not as extreme low as it has got down to before. But the main thing to look at here is that, you know, there's a lot sitting on the fence right now. There's a lot that are like, shit, I don't know if we're going up or down. So I just don't even want to borrow it. I'm sitting on the sidelines. So, and that's actually how a lot of fund managers are too. And I'm going to talk about that later, that there's a lot of big money sitting on the sidelines because they're scared of what's coming, but they're also probably feeling a little bit of FOMO lately because the markets have been doing nothing but going up since, well, not nothing but going up, but they've been going up since October. And I'm going to talk about why that's important soon as well. So yeah, that goes off the stock market at the moment. You know, we're kind of like in that neutral kind of pattern. People are kind of aren't too sure. We're not. I'm a contrarian trader. So when everyone gets really bullish, I go bearish. When everyone gets really bearish, I go bullish. When we're kind of in the middle here, it's kind of hard to know which way it's going to go. So yeah, the sentiment can really help you decide that factor. Looking at crypto, back in October, November, etc., we were down in those low 20s for a long, long time. And we talked about it in MTC that we had been down there and sentiment had been pretty low for a while, that it needed a bit of a reset. We've done that. And for the last month, we've been up in those high 50s, low 60s for quite a while now. So yeah, this is up in the greedy zone. It's not like euphoric, but it is definitely the highest it's been since the bear markets actually began, which is what I'm going to show you now. So this is the crypto, this is Bitcoin over the Fear and Greed Index here. And what you can see is this is Fear and Greed Index up here. Like we have been up in the 90s and stuff before, but we have also been around these 70 zones, which is where we kind of are now, this 60 kind of zone here. And as you can see, whenever we got massive fear, so not massive fear, massive greed, what did we get? Correction, correction, greed, correction, greed, correction, even though it's a sideways still correction, greed, correction, greed, correction, greed, correction, or the greed, and then big correction, and then fear other way. What do we get? We pump up, greed, correction, fear, pump. See how it kind of, that's why it pays to be a contrarian. You kind of really should be doing the opposite to what people are feeling. And it's kind of like, if you've ever been snowboarding before, it's like that. Like when you first ever go snowboarding, you're going down the hill and everything in your body's telling you to lean back off the hill because you're scared to lean. But in fact, you're supposed to actually lean into the hill to control the board. And it's going against every kind of instinct that you want to do. And that's kind of how the markets work as well. When everyone's really, really fearful, you should be bullish. And when everyone's really bullish, you should be like, oh shit, okay, this is not normal. Maybe, things are going the other way. So yeah, same thing here, really bearish, we went up, really bullish, went down, really bearish, went up, really bullish, went down, and you can see it. And then even here, bullish. And as you can see now, we're up in that kind of bullish-ish kind of area, up around that 70, 60, 70, that often we have had kind of retracements. So just got to keep that in mind, that often when we get up to this kind of area, there has at least been some kind of retrace. Doesn't mean we're going to dump, but there has been some form of at least a retrace. So sentiment is showing that we're up in that kind of greedy, and there could be a bit of a market sentiment. And you see it all over social media. Everyone's calling alt season, and everyone's super bullish. And the other thing you got to remember is markets aren't designed for the common man to win. They're designed for you to give your money to the big guys. So yeah, again, if it seems really easy, they'll end up getting it back off you at sometimes. Sometimes they make it seem really easy for a long time, so you think it's really easy, as people thought all this here seemed really, really easy. Then all of a sudden, oh shit, bit scared. Then they thought, oh no, fake that. And then they've pretty much given back all of that's Bitcoin. Some of those altcoins are down 90, 95%. So all of those gains have been given up. So you got to know when to get in and when to get out as well. I put up this before. Historically, you probably heard the saying, selling may go away. Historically, as you can see from the data here, over 50 years, that kind of May is red. And if you look at January to April, historically, that's the 3-year there, but historically going off there, it's really green. And October to December, historically, is super green as well. It's called the Halloween effect. So yeah, often around that October. And if you look back on the charts, you'll notice that September, October is often either a market top or a market bottom. Check it out. Same thing around that June or end of the year. And it's kind of like the seasons that we have, we have our 4 seasons, and just like same thing kind of happens in the financial markets as well. Around that December, January, you often have a lot of movement, that March zone, that June zone, September zone, etc. And just like our seasons as well, it doesn't mean that on the 1st of March, summer's over and it's no longer hot. If you were still around recently, it's still been super hot only till a couple of weeks ago, even though summer ended. And same with winter. Doesn't mean, it just means roughly around that time, often it'll happen. So yeah, going off history, this is going from 1960. You can see super bullish, super bullish. So this is what we've just done. That, that February, which was a bit of a shitty month, and then at that, we're coming into that. So historically, over the last 50, 60 years, this is a bad time on the stock market, which does that flow on to the crypto. We'll see. So yeah, keep that in mind. It hasn't been as bad as of late, like the last kind of 5-10 years. But again, there's been a lot of money printing and we've been in a mega bull market. We weren't in a bear market going into it. So think about that. All right, so next week's a big week. One, we've got the FOMC meeting, which is always a market mover. Well, it's not always, but it is at the moment because of the high inflation, etc. But the other thing is we've got a couple of big earnings coming out as well. First week, we had some pretty shitty earnings with Tesla and I can't remember what the other one was. There was another one as well. That was pretty shitty. Last week, pretty good. The big caps, they surprised, and a lot of people, they started pumping money into those big caps. This week, we've got the big boy, Apple. Qualcomm's a pretty big one as well. Even Shopify is pretty big as well. AMD, Ford, Starbucks. There's a few kind of big ones in there. But the main one will be that Apple, and then I'm pretty sure the FOMC meeting's on that Friday. So this period in particular, pay very particular attention to that Thursday night. There you go. So yeah, you got Apple and the FOMC coming out right there. So that'll be a market mover. Be careful of that. But for crypto, the big ones to look out for: Coinbase, MicroStrategy. So we'll see how those two play out, which might affect Bitcoin in some way as well, especially Coinbase, but also MicroStrategy as well. So yeah, keep an eye on those two for crypto. They could be little market movers for crypto as well. The other thing I talked about was the macro environment. So these are kind of the cycles of how things go. And you've probably seen it kind of play out even recently. We've had mega bull market, all the technology, things like that go ballistic. And then in 2021, early 2021, I'm talking January, February, before you guys even thought about a bear market, bonds started to fall away. That's when I locked in my interest rates low because I could see the yields were bottoming out. So once those bonds start going, that's right. And then commodities and stocks keep pumping. They kept pumping for that whole year. Then the stock started to roll over. What kept pumping? What was the hot thing that everyone was talking about at the beginning of 2021? It was your oil and your commodities. So then oil started going ballistic, went up to 120. They started going really well. And then what happened? Then the oil started to roll over and some of your commodities started right. So then we started to roll over as well here. We could still be in this one as well here. Like commodities could still pump up a bit more as well. But the main thing we're looking for is this then resets. You come back to this one. What happens? Stocks and commodities keep going down. Bonds go up. All right. Money goes into the bonds. So we really want to see those bonds come up. And this here is the yield curve, which has forecasted many a recession. You can see there, that was your tech bubble, your GFC, the COVID very quick 2-month or 3-month recession. So they printed our way out of it. But the main thing that you need to look at is the tech bubble happened in 2000. As you can see where this dot is, that's April 01. That's 18 months into it. Here, October 07, not until it came up. And here, January 20. If you know anything about these crashes, the COVID drop didn't bottom till March 2020. The biggest drop happened after the yield curve uninverted. I'll show you what I mean. I want to put this chart in, go US10Y, which is your 10-year bonds, and go / US02Y. And what that is doing the ratio of the 10-year to the 2-year. And to break that up in simple terms for you, why it depicts many a recession is, if you think about it, I'll break it down in easy terms for you. If you were to give me 100 grand and I were to say, you're going to lock it up for 2 years or 10 years, you'd be expecting a lot better return if you're locking up for 10 years compared to 2 years, because you're giving it to me for 10 years instead of 2, aren't you? So here, this is showing that the 2-year is outperforming the 10-year. So that is the bond market telling you in the future that they believe something really bad's going to happen. So that's why it has forecasted a recession. And if you know anything about the bond market as well, the bond market traders they're often referred to as the smartest guys in the room as well. Because if you think about it, if you're a mum and dad investor, you're not going out there trading bonds, are you? You're out there buying equities, trying to get your different stocks to go to the moon. So the only people that are really trading bonds are people that know what they're doing. So that's why they're often referred to as the smartest guys in the room as well. But as you can see here, I'll go to the monthly. So back here was your 87 crash here, and then you had tech bubble, your GFC and your thing here. But the main thing to look at here is where we have here, that's March 01, September 07. That's when the GFC started. Okay, that's where the GFC started to fall away. This here is where the tech bubble started. The tech bubble didn't bottom till 03. So when it uninverted, the biggest move happened on the, and then same thing here, we know that the COVID drop bottomed up in March here. So we haven't uninverted yet. So history shows that the biggest move happens when the yield curve uninverts, when we come back up. And it kind of, again, goes against what you think is like, well, isn't that good that it's coming back up? Like it's bad when it's uninverted, it should be good. But it's actually means that the Feds had to pivot, and that the reason why they pivot is because they've broken something that bad that they had no choice but to step in, and then it goes up. The other thing is, the deeper this is, often the harder the recession you'll get as well, because it's the harder the inflation. So we're the deepest that we've actually been here, but actually if you do take it back to the energy crisis, we're down around those kind of levels around the energy crisis, which is when we had super high inflation as well. So yeah, that's and then if you know anything about the energy crisis time, it went on a sideways bear market for about 15 years. So yeah, it does. Looking at that there, it is showing a falling wedge pattern. So falling wedge on bullish divergence as well. So you probably see me put up this chart going, it's actually the scariest chart that we have at the moment, because if this does come up and start uninverting, that means that they're most likely going to pivot, which means that most likely we then get that. Just going off history, this is not, history is not, but going off that, if 3 people jump off a cliff before me and for the death, I'm not going to be the 4th guy thinking that this time's different. I'll go until something changes. I'll go with that. So yeah, we haven't, we're still in a downtrend at the moment, but we have broken just above there, but it needs to print a higher low here and then come back up to then change market structure and start moving up. But that bullish divergence is definitely something to take notice of, as you can see from that falling wedge. Yeah, it's looking like that it might start to pump out there. So yeah, that's what that one's referring to there. But the bond market to keep an eye on as well here is this one here. As you can see, been coming down and down and down, and we've now got a higher high, higher low, and we're hitting up against this resistance. So if we break above that resistance, then we have a change in market structure on the weekly, and that would mean bonds are rising, which would then mean that yield curve would uninvert, which would then mean that we would be entering this stage 1. All right, so that's what I'm looking at for that one there, going through that cycle. But yeah, until really those bonds start pumping up again, we haven't hit that one. But yeah, people are calling a bottom, but bonds haven't started rising yet. So going off the business cycle, we haven't actually got back to that stage 1. We're still at this part of the bear market here as well. This one here as well, the Dow to gold ratio. I've just put this one up today because the Dow to gold ratio is a great way of showing when, using it and looking at it on the big timeframes, it has been a perfect indicator for looking at major macro trends. Because if you look here, when we were down in this support here, that was the Great Depression. And then that's where gold and precious metals outperform equities. They went up. And then here, this was the energy crisis where we went into bear market for 15 years and high inflation. And then again, same thing, commodities and precious metals went ballistic. And then equities you wanted to be in. So here, you wanted to be in commodities, equities, commodities, equities, commodities, equities. And this is why we in Australia did really, really well out of the tech bubble up to the GFC. We went ballistic because we're mostly commodities, and we went ballistic there, and then we've come back down. So what I'm looking for here is that purple zone that would change to a higher high, a higher low. That would confirm the move up for precious metals to outperform equities. All right. So just again, going off history. But the thing that's really interesting is when we were being down at these levels, they were one very, very major periods: tech bubble, energy crisis, Great Depression. But then if you also put the Shiller PE ratio on there, which is the inflation adjusted PE earnings, is that when we've been up at these times, it was the Great Depression, Black Tuesday, when equities were really, really, really expensive, tech bubble. And then here it wasn't as bad, but again, that was more of an inflation problem, not an over equity. Where we are now, we're kind of like, this is what I'm talking about to the MC guys. I'm like, it's actually kind of where we are now is a perfect storm of actually all of them combined. We've actually got really high equities, we've got really high inflation, and we've got really high debt. So it's like all three combined where we are now, which is a bit of a scary thing. This here is the average. PE 17. This is the average PE here. So yeah, that's what I was talking about with that. But again, these candles are 3 monthly. This is not going to pump out tomorrow or next day. Each candle there is worth 3 months. So this is what I'm talking about. It's major macro trends. So this here, you know, from there, that's 1960 up to 1980. That's 20 years showing that difference there. Even there to there, that's 20 years. So yeah, don't think this is going to mean it's going to fly the ass tomorrow. And like this is over long-term investing kind of stuff. All right, so that's the data gold ratio there. So I'm showing you the kind of macro reasons why I was a bit like, ooh, we're at a bit of a scary time looking at all these kind of things. And then I then look at the TA to then see if that actually backs it up. That's my whole approach. Is I kind of like think of it like a bird in the sky, like an eagle looking to attack its prey. It looks from above and it takes in the big picture, then it dives down and looks at yeah, that's kind of my whole approach. I like to look at everything, and then so I look at the macro, I then look at the TA, and then once I find what I like, then I use my FA to then dive into the stocks or the crypto I like from there. So this here, I talked about UPS. That was the one I saw. So UPS was one that I was actually really, really looking at, because at the end of the day, UPS got absolutely smashed in earnings. And the reason why I was looking at that, this comes back to Dow theory. And one of his TNETs or principles that he has is that the stock market averages should confirm. Yeah. So that means that if the Dow Jones Industrial is going up, the transportation. Okay, let me just. Someone's being loud here.
Driving in as co-host, bro.
Let me just mute everyone. Hang on. Actually, I can't remember where it is now. Where is it? I haven't had to mute people for ages.
So just click on security and then you can go don't allow people to unmute.
Yeah. All right, done. All right, yeah, just chuck anything in the chat if you want anything. Yeah, so this here was the tech bubble in 2000, and as you can see, the Dow kept going up, but the transportation average was going down. And if you think about it like that, it's, you know, if transportation, you know, if Amazon, if they're all the deliveries and that are getting less and less and less, and that's actually a leading indicator that there's less spending. So that's why. Hang on, I haven't actually muted everyone then. How do I actually mute them though, Jacob? Because that's saying, but it was here. Mute all. Here we go. Done it. Forgot where the thing was. All right. Yeah. So that was, yeah. That's why I was looking at that one in particular, because that's actually showing the health of the economy. That's showing that, yeah, if they're down, deliveries are down. That means spending's down. So that's a leading indicator of that as well. So yeah, that's why I was really looking at that one. And that comes back to Dow theory, which is why it's super. All right. Last one to talk about here, and this is the one that I really want to talk about, is your market breadth. So this was one of the things that I looked at the end of 2021 as well, is that actually if you looked at the market breadth, which is how many stocks are participating in the rally, it was super, super low during that thing, which was one of the reasons why some of the major bear markets we've ever had, you know, check bubbles, etc., happened on that. It's the big boys that are holding it up. It actually kind of goes the opposite in crypto. Often Bitcoin drops us first, and then the altcoins keep pumping. And then same thing, and then Bitcoin bottoms first, and then the altcoins bottom last. So yeah, crypto is a little bit different, but in the stock market, again, if you think about it logically, you've got to think like a billionaire. If you had $1 billion and things were getting a little bit shaky, a little bit worried, what are you going to take your money out of first? Are you going to take it out of Apple, or are you going to take it out of, you know, something like MicroStrategy that's a bit riskier, you know, he's going on the Bitcoin, that kind of thing. So, you know, you start, money comes out of the smaller caps first. And that was one of the leading indicators that I saw on the market as well, is that the Russell 2000, the Russell 2000 actually topped out and went in a sideways range long before the stock market as well. So if you look here, actually in February to pretty much February again, so for a whole year it went sideways, whereas the stock market kept pumping and pumping. This here is Wyckoff distribution 2 in absolute T. If you type in Wyckoff distribution in Google, this literally will come up, and that's your spring there, where it goes out, fakes mat, and then it distributes back down again. So what we've got to think about from that then is that redistribution, or is that accumulation to then go back up? Again, this is kind of me just thinking logically. I'm like, well, hang on, big money spent a whole year distributing this for a year. You don't secretly sell out for a year to then buy it back after a little bit of a drop a year later. That's kind of just my logic behind it as well, on top of some technical indicators that are still showing a lot of weakness. But yeah, that's that there is classic Wyckoff accumulate. But yeah, that's it. Again, if you want to look where things are going, again, leading indicator, this should rally before the NASDAQ and the S&P 500 when you're in a healthy market, because it's showing risk appetite. It's showing that investors are, and this one still is looking in a sideways market right now. So yeah, leading indicator is your Russell 2000, because it's showing the big money's getting out of the small stuff, the shit stuff, really. So yeah, that's that one there. But this is what it's showing now, is that, yeah, where we are right now is that we haven't had this kind of market breadth since the Great Depression or the tech bubble. So it's really the only thing holding up right now is your Apple and your big boys. And the reason why that's there is, you know, Jacob talked about that. I've run a crypto fund for several months. And one of the things that I had to do during that time was I had mandates, and I had to have so much invested at a certain time. So I always had to have, I think, 70% Bitcoin invested. So when I could see a market downturn, I wasn't able to sell. So what I actually had to do was then short, and I had to hedge against it. And that is what a lot of fund managers have as well. They can't just sell up like you and I have. And that's where we have that added advantage. We can buy and sell whenever we want, and we can do it without moving the market, which is what's really, really important. When fund managers, or some of them do, they're market movers. So that's what you've got to think about, is that right now they're not in, but it's the big boys holding up. And the reason why the big boys are holding up is because they have to be invested. Where are you going to be invested if you've got $1 billion? You're going to put it in the big shit that's not going to drop 20% overnight. And you're also going to put it in the big shit because there's so much liquidity there that if you need to sell, you can sell like that. Because again, unless you've had big amounts, you can't just buy and sell like you and I can. They need to be able to get in and out really quickly. And that is why this market breadth is really, really important, because they have all of their money in these big caps because one, like I just said, that it's not going to fly the ass, and two, it's liquid. They can get in and out if they do need to. And again, going back to those cycles I talked about, there are certain sectors and things like that that perform really well. And same thing, the mandates are telling they have to be in. Are you going to be in tech, which is super, super expensive, or are you going to maybe go into utilities and things like that, or energy that's an inflation hedge that's going to, that's going to probably give you better performance. But the thing I do want to point out is that even though as I've shown you, these are reasons why I'm bearish on the big picture, there is a chance that we have some kind of melt up in some form of way. And like I talked about, there's a lot of, the worst thing that fund managers want is to underperform. And if they are in cash and they are underperforming and the market's going up and the market keeps going up, they're going to get FOMO and they're going to start rolling in, because the last, fund managers are only as good as their last performance. And if all of a sudden last year, this fund manager was getting 30% and this fund manager has got -5% because it was in cash in safety, people start rolling their money into the one that was best performing. It's kind of like being an athlete. You're only as good as your last game or your last season kind of thing. You got to keep performing. So yeah, just there is a chance of a blow off top, which is what I'm talking about. Which is what I'm going to talk about. Even though I'm bearish on the big picture and looking at that kind of stuff, there is a chance on the smaller timeframes that we do have a bit of a push up to kind of bring in this kind of money here. So yeah, that's really the kind of macro picture that I often do on each MTC. And what I want to just quickly show you now is what I actually saw back when I did this at the 2021 here as well. And as you can see, it kind of came from this channel. We had the Great Depression top here, and then we bottomed, and then we've been in this channel ever since. And if you were to draw this channel from the top of the Great Depression to the top of the tech bubble, we are also back at that resistance level then. Going back to that Dow Gold ratio, what did we, or the Shiller PE ratio, we had extreme Shiller PE, extreme Shiller PE, extreme Shiller PE. So we have extreme evaluations at this resistance level. Isn't it coincidence how the TA matches up with the macro environment as well? So, and then here it was the bottoms here. So if we do reject here and we do start to roll over, this midline would definitely be a major support. As you can see, it's been resistance, it then flipped to support. So this kind of level here would be a level if we do start to roll over on the big picture that you'd be looking at. The other thing to take notice of is that we've had bearish divergence from the tech bubble to the thing for the first time ever as well. We've never had bearish divergence. We've had the like the little ones, but never from a major pivot before have we had bearish divergence. And if you know anything about elite wave, you get bearish divergence on the 3rd to the 5th wave as well. So that's a little bit scary that it could also be a bit of a cycle top from that kind of thing as well. Going another thing from Dow theory is one of his principles is that volume must confirm the move. If you look during all of this up to the tech bubble, we had really beautiful, nice increase in volume participating in it. From there, bottom of the GFC, we've had decrease in volume. Why has this market been going up? It's been going up because they've been printing money since here. $30 trillion printed. Every time we had a bit of a shake, print. And it keeps getting up. So it's been going up on lower in volume from this part here as well. But as you can see, there is room for it to still, it could even come up to something like here as well. So there is room for it to still come up. There's a lot of people calling for a 2026 crash going off the real estate 18-year cycle that comes to 2026. So that is a possibility that we come up to this kind of 2026 zone and we hit it again there as well, which would then still kind of be a bearish. So these are the things that you got. This is the big picture, looking that we are at a zone that's really scary, but this is on the big picture here. So looking, if I go down to the 3 monthly here again, you can also see from that, you've got bearish divergence from there to here to there as well. So you've actually got a complex triple bearish divergence off that one as well. So again, it's showing, and you can again see the volume nice and healthy uptrend, lower in volume, lower in volume. So since this COVID bottom, this whole move has really been stimulated by fake money, by money printing. So yeah, that's just another little thing to, and then again, like I talked about, and this is the reason why I got a bit scared, is I talked about from that 3rd to 5th. So here, 3rd to 5th, you're getting bearish divergence as well. So that's why this cycle could be complete, which means we're correcting this zone is here. So yeah, just a few little things like that, which is why I was like, oh shit, we're at this top resistance. I'm a bit scared here. And then once I got, that's on the bigger time frame. Then once I got the bearish signals on the daily and the weekly, I was like, I'm out. And then, yeah, and that's why I was able to see things like that. So yeah, that's any questions on that stuff, just shoot it through in the chat and I can answer them as we're coming up. So yeah, so that's why I'm, I guess, bearish on the big picture. I've shown you the macro around it, and then I've shown you kind of the technicals behind it as well. And then that's the SP 500. So now I can show you Bitcoin. So with Bitcoin, looking at Bitcoin, I'll zoom out to the monthly. So what you have with Elliott waves as well is that you always have one wave that's extended. Often it's the 3rd wave in equities, and in commodities it's often the 5th wave, which is what everyone was expecting with Bitcoin, because it's digital gold. It's a, you know, it's a safe asset, that kind of thing. But going off the data, what we've seen, except for recently with the banks collapsing, it actually has followed equities and followed high risk assets. So what I've actually got on this one is that wave 1 was extended wave, because often wave 1 will be extended when it's some kind of new technology, which I believe it is. It's blockchain. That's why I'm super bullish on it, because I believe blockchain will be something that will be mass adopted. They tried, they're getting there. They had some error, you know, some problems with Ethereum not being ready, stuff like that. But, you know, people like, if you think about people like Tesla and stuff like that, they're going to need, you know, the blockchain technology for their self-driving cars and stuff like that, because who's anyone that's of any importance, you're not going to get in the self-driving car if someone can just hack into your system and crash your car and kill you. So they kind of need something that they know is unhackable, and, you know, something like that. And that's where stuff like blockchain and that can really come in and really help with that. So yeah, I've got this one as, and often if whatever wave is extended, the wave within that wave is extended. So if I've got wave 1 extended, then wave 1 within that wave 1 is extended as well. So wave 1, 2, 3, 4, 5. The misconception people have is that wave 3 needs to be the longest. It just can't be the shortest. So if you look here, wave 1 here, 3 is bigger than the 5. So it's not the longest, but it's still bigger than the 5th. And that's that one there. And something you learn as well, at the moment, I'm studying from Elliott Wave International to be a certified Elliottician. And one of the things he talks about is with your channels is that once you get your first wave and your second wave, and then your third wave, you can actually join the top of your first and your third to your bottom. And then that will help you find where your fourth wave will be. So you got your 1, 2, 3, you were able to draw them in, get your channel, and you can see the fourth wave bottomed perfectly at this bottom channel here. And then we've come up to this 5th here. And another thing about channels is that if the channel fails to get up to the top of the channel again, then it's showing weakness in the strength of that channel as well. So as you can see now, we were in that channel. So we got 1, we're up in this channel, we've broken out of the channel, and now we're coming back and testing that channel as resistance right now. So you can see at the big picture why this zone right here for me is a critical zone, because 1, first of all, it's the major pivot low here. And then 2, we've broken out of the channel. If we get back above that zone, back above this 36K, we're getting back into that channel again. We're not rejecting it and falling away. So that's me looking at the big picture. is that we've broken out of the channel and we're coming up and testing it as resistance, which also tends to align with the pivot low here, which also aligns with the Fib 618 as well from the retracement. So there's a lot of bit of confluency where it is right now on the bigger time frames. I'm going to show you why it's super important on the smaller time frames as well, and what I'm looking at. So yeah, that's me looking at the big picture there and why this is a big zone here. Looking at the monthly here, and again, big money will follow the monthly candles, because when they get in shit, they're not getting in for a couple of days. They're getting in for the big move. So what they're looking at is they're actually looking at even this zone here, which is that 30 kind of 5K zone there. So just keep that in zone as well, that the monthly blocks end right there at that 35K. So keep that in mind as well. I'm going to move over to the Bitcoin futures. Where is it? There it is. All right, let's get down. Let's get down and down. All right. So looking at the daily here. Oh, actually, before I do that, let me show you how I knew Bitcoin was also topping out when it did as well. Because otherwise you won't understand what I'm about to talk about. All right, something I've taught the MCC guys is the on balance volume tool, because again, coming back to what I talked about with Dow theory, is that volume must confirm the move. A lot of people put so much emphasis on price action, but price action means nothing if volume's not confirming it as well. So volume is super key when looking at all these different things. And if you look, sorry, I'm in the wrong one. BTC, USDT. I use the Binance charts because at the end of the day, the biggest exchange that has the most liquidity. So if you look at here, well, first of all, it was easy. There was a rising wedge on that one there. But the main thing that I was looking at as well is that if you look at the COVID, so this is the volume tool. When this is going up, it's showing buying pressure. When it's going down, it's showing selling pressure. So if you look here, this was the bottom in 2018, and then that was the COVID bottom there. And if you look at when it came down, can you see how that there was the bottom, and then we got to that same level in price, but volume was much higher? That's what's called bullish divergence. So that's showing that selling is not actually stepping in here. Smart money is actually buying this dip. And then as this is going up, see how the volume's going up. It's showing lots of buying pressure. And then it stalled right there. You can see how it never made a new high there. It stalled. Resistance. That point here, if you look, was actually that point right there. So from there to there, that whole point there was actually your dumb money coming in. That was your retailers. Which again, if you go to your news event, what happened then? Tesla's bought Bitcoin. Everyone's all over it. Yeah. FOMO, retailers. And again, you got to think like smart money. They can't sell. Oh, I feel like selling my $1 billion of Bitcoin tomorrow. No, they can't do that. They need to secretly sell it. They need euphoria. They need to sell this when no one's thinking about selling it. So that's what's called distribution. They sell little chunks, little amounts at a time. They might go, okay, I'll sell $1 million today, $1 million tomorrow, $1 million the next day. And they sell it over an amount of time. They can't just buy and sell like we can. All right. And that's why you get these distribution patterns and accumulation patterns. So see how it's hitting the wall, resistance, but price kept going higher. That's showing distribution. And again, that is literally Wyckoff distribution to a T. Your spring there came down, and then the reverse happened down here. You then had the opposite. You had a falling wedge. So see, rising wedge, falling wedge. And then what did you have? You can see on the volume, the opposite. You had price going lower, volume going higher, big money buying it back up. What did we get? Going up. And this is why I then was able to call the top up here, because if you look at the volume that's coming up super low. Volume when price makes a new high, volume should also be making a new high as well. Never got anywhere near. So this is dumb. This is either one big whale pumping it all up, or it's this retail's pumping up as well. And up. And then we start falling away. Where big money exited big time, which is what I'm getting to. I needed to show you the purpose of this tool. So here, support. I showed you why that was significant on the monthly once it broke below that zone. Big money exited right here. You can see it in the volume. Ready? So look at the volume. So we saw the buying pressure, smart money buying up. Now look at them exit. Ready? Sell pressure. They're selling the shit out of it here. They're exiting. And then what you can see even now on this rally is we had a nice pump, and then we're getting what's called divergence. Price is going up, volume still going lower. Volume is not confirming this move right now, which is why I keep talking about the fact that we're in a weakening trend. But one of the things I keep nailing into the MC guys is that you need price to confirm it as well. At the end of the day, we still have higher high, higher low, higher high, higher low. We need to see it break below. And the point that happens is right here. So if we break that support level, the market structure changes on the daily and goes back below and goes back down. All right. So DHS would, so that's Binance. But if you look, even if I do the Coinbase one, it's the same thing. So Coinbase, I actually do trust more because two reasons. One, Coinbase is only spot buying. There's no leverage, so you know that it's not been manipulated by that in any way. And two, that it's it's on the Nasdaq, so they have rules that they have to follow. But same thing, you can see even on the Coinbase one here, when that support broke, dumped. This move now is going up. This move was all right, this first move, and then this whole part here has been going up on sideways volume, which is a correction. If you want to see examples in the stock market, again, when I called the top on Zip at $14 and everyone's going, it's going to the moon, let's look at that last move here. Look at your volume. It dumped away here, and that last move went up on lower in volume. Retailers coming in. What's happened since? Dumped. Dump. And what's happened with the price? Dump. All right. Another example, PBH. Same kind of thing. It was going up really nicely. Really nicely. And then once it broke below and started to fill this gap, it started to get dump. Okay. So you can see how the sell pressure comes in and starts to really, they really do these kind of things. Oh yeah, so yeah, you're right, Kelly. I forgot to show that on the SPX. One of the reasons why the SP500, it wasn't just the channel that was really the thing as well. It was also, there's something that I've been teaching the guys as well, is the fib extension tool. And when stocks and crypto and stuff go into what's called price discovery, when there's no price above it, the only resistance it has is actually the fib extension. So if you come over to here, you got fib trend-based fib extension. If I go from the very bottom of the Great Depression and I go to the top of the tech bubble and I go to the bottom of the GFC, it actually hit the 2.618 to the T there. The 2.618 fib extension. And that was actually the reason why as well. So you got the fib 2.618 at the channel resistance. You got multiple levels of confluency there. And then on top of that, you can also see what happened at the 1.618 there. That was actually the COVID drop that dropped down. And where did it find support? On the fib 1 level there. Coincidence? Let's look at some more. Let's go down to even this move here. So going from that move to that move, you can see that these market tops happened. Let's go to the 3 month, maybe I'll see it better. try this again. So from the bottom of the Great Depression to the top, to the bottom, and then you can see where did that top out? The top of the 4.618, which is the max extension you get. Then you got to drop. Okay, maybe coincidence again. Let's look at another one. Let's go from the energy crisis that I talked about. Fib extension from the bottom here to your top. This is what's called an ABCD, a triangle, and then to the bottom there. And then what did you get? 2.618. You got the 87 crash, which is where the stock market dropped 30% in one day. So you can see how these fib extension tools have done all these kind of things. And, you know, even something like PointsBet that I showed you before, I've shown the guys on this one when I was teaching them bit of Elliott wave, that all these waves all ended at fib extensions. If you go up to there, to there, to there, you got the 1.618, and then this one here ended on the the fib 618, which are all different levels as well. So you can just see the power of these fib levels. I haven't got that down. These fib levels, the 618 on that one. So yeah, there's lots of cool different tools and things like that you can do to help with that. But getting back to Bitcoin, so I've shown you where it is a really significant level, but the thing I want to show you right now, that on that daily, you look where we are right now. So let's cross point it. So using our thing, so big money exited there. Let's do a horizontal. I mean a vertical. Where's our vertical? Okay, so you can see big money exited there. Where are we right now? We're back at that zone again right now. So it's squared up to that zone where big money exited last time. So there's a lot of liquidity up here where it's come up to, which is why this is a major resistance for it to come up to as well. It's also going off those fib extensions I just shown you, is at the fib 1.272. No, it's not. Sorry, I'm lying. I thought it was. All right, so there's that. And then what I want to show you on the Bitcoin futures as well is that often you'll learn about, if you trade stocks as well, that you get these gaps as well. The Bitcoin futures is Wall Street trading Bitcoin. And these gaps often get filled, not over 90% get filled. You can see here, and it's where traders look. You can see here, this one. Let me get this better. So gap got filled perfect to it. Like that was pretty much the resistance that it hit. Came down, and then we got a gap here. Gap right there. Look what happened. Gap. What did we hit? Literally the wick came down just to fill the gap and then continued back up. And then as you can see here, we've got a couple of gaps here. We've got this gap here that's now been filled. That gap became resistance, filled. This gap here got filled. We still have a gap here that's not filled. So this one here. So that will most likely get filled at some stage. So keep an eye on that. But the other thing I'm looking at is also that gap there still hasn't been filled. All right, so there is a chance that we can get up to this zone here at 35, okay, which is why I've put up that post around 35 being a huge number. It's also the fib, the cloud, the Ichimoku cloud, you break through the major resistance there as well. But I want to show you why this is a major zone. So one, it's a gap, okay? Two, it's also major. You can see support, resistance, support. So it's an area that it's the market's reacted to a lot before as well. But then on top of that, there's something that's called fib clusters as well. So if you come from the top of this peak to the bottom, you can see we've hit the so I'm on the log. The 618 aligns with this zone right here. So golden pocket ratio there. But then on top of that, if we go from the peak as well, peak there, going down, you can see we've also got the 382. So you've got what's called a fib cluster, which is where you have multiple fib retracement levels hit a zone. So that's going to be a major resistance for it to come up to as well. If we get up, we fill that gap, hit this fib cluster, which is also a major support resistance. If you want to know how, let's look at the NASDAQ right now, how important those fib clusters are. The NASDAQ bottomed recently on a fib cluster. So if you look here, doing the same thing, but the opposite, going from the bottom. So from the bottom of the GFC up, you can see we've hit the fib 382 from there. And then going from the COVID bottom, fib retracement 618. So see how the 618 and the 382, that's showing you a fib cluster. It's a really strong support zone. Fib cluster, strong support. On top of that, do that with your bullish divergences. It was a strong buy zone off that zone. So yeah, that's could have got the bottom of the NASDAQ just recently off that, just using that fib cluster on bullish divergence, stuff like that. So yeah, these are kind of reasons why things are either a massive support zone or a massive resistance zone during these kind of things. So you can see why that 35 key is such a key zone, which is why I've been talking about that's a zone if we get above 36K where I myself would be like, ooh, maybe this thing's about to keep going. This thing can keep going. Even though volume's showing me it's been dumped, these kind of things, those fifth waves can go up on lower in volume. So yeah, it can keep going. And yeah, so things like that are pretty powerful. So that's pretty much what I'm looking at with Bitcoin right now. Is you can see we're at a really key zone right now, because as you can see, that's where big money exited big time, where it is right now. There is pretty big divergences happening on it, but again, it needs to be confirmed. So again, see how price is going up, up, up. Relative strength going down, down, down. So it's showing momentum is weakening from this point here. So yeah, that's something to take. But again, you need confirmation. Confirmation happens when we break below that zone there, because then we have a change in market structure. We would have a lower low, lower high, break below. All right. So until then, because again, these divergences can go on forever and ever. Not ever and ever, but can go on for a long time. Look at this. This thing here diverged from there to there, to there, to there, to there. Look, it eventually all rolled over, but how long did it diverge for? It diverged from January to May. So it went for 5 months diverging. So it's showing it's a weakening trend, but it's, yeah, that it's going to eventually roll over, but you need that price confirmation to happen. Higher high, higher low, higher high, higher low, higher high, lower low, lower high, got your change in market structure. We broke the pivot. So break the pivot, change in market structure. That's what we're looking for back here. Break the pivot, change in market structure. It would confirm the weakness of it. All right. So yeah, that is what I'm looking at. So as you can see, I'm still bearish on the monthly up. So the big time frame, unless we can take out that major 36, 35, 36K. And that means a monthly close above, not just a wick up. And so we need a monthly close up and then go up. But I'm still bullish on the daily, but I'm weary because of the weakness. So I'm looking for weakness. If we break below that, I'm out of everything, any kind of long that I'm in. I've already been stopped out of a bunch anyway, but I'm still in a few alts, and and I'll be out the minute that we break below that kind of thing. So yeah, that's Bitcoin. Let's look at Ethereum, because Bitcoin's what's called the king of crypto. Ethereum is the queen or the king of the alts. And same thing here. You can see the divergence. You can see higher price, lower RSI. Again, volume. You can see lower. So volume's still not confirming the move yet. The zone, and again, look at this little trick for you. Let's look at where Ethereum has bottomed every time, looking at the big picture. Delete everything. So using our trend-based tool I've been showing you from the top to the bottom. Get off this. Where did we bottom? We bottomed at the 1.618, which is the golden ratio of the fib extension. Bottom there. Okay, and let's look where we are right now. Same thing, 1.618. So the last bear market bottomed at the 1.618. This correction has bottomed at the 1.618. So could this be a bottom? Possibly, going off history. ABC 1.618, ABC 1.618. A confirmation of that would be getting above that zone there, because off Elliott wave, if this is some kind of impulse to the down, that would be 1, 2, 3, 4 can't enter the territory of 1. So the minute we get above that 2150, we're getting that territory, then it negates that could be a 1, 2, 3, 4, and then a fifth down, and then even further. But yeah, but it could be some kind of complex correction, like a 1, 2, 3, 1, 2, 3, 1, 2, like it could be further and further, but it would at least get rid of the mega bearish scenario of it going a lot lower. There is a lot of confluency. If we do end up making new lows where I'm looking at, there is a lot of confluency at this zone here. You can see it was resistance, support, resistance, support. It's the fib 618. So if we do break below, I'm pretty sure even had a, yeah, so and the fib ones around here as well. So yeah, if this was to go further down, this zone here would definitely be a zone of interest. This 380, 400 that I'd be looking at as well. Then we've got to be careful of as well, is if we do roll over here, you would have what's called hidden bearish divergence, which is continuation, which is where you've got a lower in price, but a higher high in RSI. So the RSI is higher, the price is lower. An example of that is was in the last Bitcoin. The last Bitcoin bear market here. You can see here where the price kept going lower here, lower, and the indicator kept going higher. So that's what's called hidden bearish, which is continuation of the trend. So yeah, just got to be careful of that. But again, we need price to confirm that as well. So yeah, that's something I'm always careful of as well, of that continuation trend, because these RSIs need to reset. And when they reset up to here, look how much room then they have to have a massive move down. So yeah, that's just something to be mindful of if something like that plays out. So yeah, that's Ethereum right now. Ethereum to Bitcoin is still, again, it is showing weakness on the volume. See, this whole thing has been kind of drifting down a bit. And at the end of the day, market structure is still down in this one. Lower. Think of it like steps. You can step down. You need to start stepping up the steps. Then you know the trend has changed. See how, yeah, even here you can start stepping up, and then you start going down again. So yeah, the minute we can get break out above this zone here, that would be a very good sign, because we change market structure, we break the decline, we get back above that zone. And I'd want to see this volume step back up as well. So yeah, that's Ethereum Bitcoin. So still a bit of weakness on that at the moment. If alts were to take off, you'd really want to see Ethereum start to outperform Bitcoin there on that one as well. Looking at, oh yeah, so I haven't shown you guys what I go through. Is I go through all of these things, and if you come into the Sydney workshop next weekend, I'll be teaching a thing called confluency, which is where you try and get as many buy signals or as many sell signals as possible to give you that ultimate buy or sell. And you got to think of it kind of like if you were pleading your case as a lawyer to the judge. You're like, oh, you've got to buy Bitcoin because it's at support. Okay, yeah, well, what else? That's not a very, oh, but it's also at the Fib 618. Yeah, what else? Oh, it's also at this, you know, and if the more evidence you have as to why you should buy it, the more chance you have of winning the case, the more chance you have of winning the trade. So if you think about it like that, what I look for is not only confluency, yeah, stacking probability is excellent. Not only looking for confluency on one chart, I look at it at multiple charts, knowing the ratios, the different relationships that they have. So yeah, that's what I'm going through here. I'll go through Bitcoin and Ethereum, and then now I'm going to look at here is the total, because if at the end of the day, if all the same charts telling you the same thing, it eliminates that human error. So now looking at total, so same thing as the divergences, going up on higher in price, indicated lower in volume. So that again, price hasn't confirmed it yet. But yeah, this is a key zone where we're at right here. Now I want to see it break above there. But again, market structure is still bullish. At the end of the day, higher high, higher low, higher high. Well, we change a bit there, but that's an ABC. But then here, that resistance, support. So resistance will always flip to support. If you think about it like this, it's showing you is sellers become buyers, sellers become buyers, sellers become buyers, sellers become buyers. And you know, Commonwealth Bank, the largest bank in Australia, has done it its whole existence. You look, it's literally climbing the ladder. Sellers out. We break through the sellers, they become buyers. Sellers become buyers. Sellers become buyers. Okay, and then this major level here where it's support, we go up, that's the GFC. They found support back there again. Sellers, we broke through, they've become buyers. Sellers became buyers. Again, sellers have become buyers. So where do you go bearish on something like this? When the floor breaks. So where sellers became buyers, when they're no longer buyers, you've got a change in character, back down again. All right, so you know that's Commonwealth Bank, which is a whatever it is, $90 billion or $100 billion bank. It's just flipped it the whole time, climbing up climbing up the steps. That is what we're looking at on that same thing back here. Is that when we go to the smaller time frame, you've got those steps. All right, you can see support became resistance. We broke through critical, have come down, and then where we were selling, they've become buyers. Where we were selling, they've broken through a bit, but we need, where this needs to hold as support. Otherwise, you can see we've fallen back through and we're going down again. But yeah, must hold that. Bullish above the red zone. Bearish, I should make that. What I often do as well is I make these good level. I make these green, so to help, because then you kind of think, oh, bulls should step in here, bullish, buying, selling. So yeah, that green zone needs to hold. Otherwise, bears step in. That red zone needs to break for continuation. But yeah, the thing is weakening trend. So until I'd be looking more bear than long right here because of the way the volume's falling away and the divergence, but the confirmation happens below that green zone. Let's look at total 3. So again, you can see support, resistance, support, resistance. See how it's such a zone? And you'll never ever see me draw a line for a horizontal. They're always zones. They're never exact price points. It's always like around that area, people are going to step in. So again, very, very easy. If we break that red zone, we go bullish. We break below that green zone, we turn bearish. So super easy there. At the moment, this one's not as, the volume's still kind of okay. But still got a bit of work to do to get back above on that one there. What are we at now? So Bitcoin dominance, let's look at that one. All right, so Bitcoin dominance here, you can see you got divergence here. All right, so we have come up. This is a major resistance that it's reacted to multiple times before. So again, resistance is resistance until it's not. So sell, 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 sell. People sell here until, well, they don't sell because it's dominance, but in that rank, so you can see sellers, buyers. Whenever it comes down to the green zone, it gets bought up, red zone, it sells off. So going off history, you'd be expecting it to reject here and roll over, but confirmation does not happen until we break below that red zone. So divergence is showing weakening, volume is showing weakening. So yeah, it should roll over, but got to see if it does break above out of here or break below that zone there. Yeah, it is perfect white. Yeah, exactly right. And anyone, if you ever see anyone put up a Wyckoff chart, if they're only putting up a price pattern and that's it, they do not know Wyckoff. You cannot show Wyckoff without volume analysis to match it. They need to be shown volume analysis. It's absolutely crucial. So if you see anyone putting up on Facebook, oh, look at this Wyckoff pattern, you need to have your volume analysis. It's the crucial part of Wyckoff. Of Wyckoff. All right, so that's Bitcoin dominance. Others dominance. Okay, others dominance. If you don't know what that one is, oh, sorry, I didn't talk about what the Bitcoin dominance means. BTC.D. Sorry, I'm joining them all together. Hang on. What is going on here? BTC. Oh, we're in. Okay, so let me zoom out. I've got it. Yeah, there it is. Quickly. All right, so how the Bitcoin dominance works is, this is Bitcoin dominance if it's increasing or decreasing. So if it does increase and break through resistance, you'd be looking at these three green ones. If it falls below that support, you'd be looking at these red ones. Then what you do is you look at Bitcoin. Is Bitcoin increasing, decreasing? And then you kind of know then what alts will do. What we want for alt season is this one. We want Bitcoin to decrease. So we want it to break that support, and you want Bitcoin to increase. All right. So if you get that, then we get massive alt rally. That is what we're looking for here. Or the other thing we want is this to decrease and Bitcoin to go sideways. And you know how it's in that kind of range right now? If Bitcoin's just chilling, going sideways, that's cool too. Alts will go up as well. So we just don't want Bitcoin to dump. So Bitcoin needs to hold that support. If Bitcoin holds that support and this starts to roll over, then you'll load up on your alts. That is what that is showing you. Okay. If this increases, if this starts pumping up through this resistance and then Bitcoin dumps and breaks that support, get the hell out of altcoins really, really fast because they're going to dump. All right. So yeah, it can really help in that way of knowing the different relationships. The other one I like to look at is the others dominance as well. What this shows you is I think it's from 11 up, or it could be 21. I can't remember, but it's the small caps. It's like the Russell 2000 of the stock market in crypto. So it's all your kind of really high risk, your kind of tiny ones. And yeah, what this one is showing you is that one there. What I'm looking for, as you can see, there's this beautiful trend. I've had this target since whenever I started this call with these guys. They know that was this is what I do. I look for zones, and I look for zones of what's called confluency, which is where trends meet. You can see that trend line meets that support zone there. And then also this support zone. So that little zone right there is where a lot of trends meet. And that is where I am looking to buy altcoins, or I'm looking for my alt market. I've had this for a long, long time. I asked the MTC crew. As you can see, we've come down, we're channeling down, we're coming down to that zone. So again, looking at it, volume still confirming the downtrend. If we get down there, maybe we'll get some kind of bullish divergence off this weekly chart as well. But yeah, that is my zone. I'm looking to load up on my alts and get, and get pumping on that one. So yeah, at the moment, let's look at the daily. So you guys would have remembered, well, if you've been following me, I went bullish on altcoins at the very beginning of the year, I think around early January, and I got a couple of multi-baggers, and then I exited them all around that mid-February, I think it was, maybe late February. Yeah, mid-Feb, right there, 18th of Feb. So that was because the others dominance topped out off this channel on bearish divergence. All right. So here, so that was showing me that the altcoins are going to start getting smashed. And if you look about it, Bitcoin's still been pumping, but if you look at those altcoins, the majority of them are still down from that day I sold back in the middle of February. So when I sold Opulus at 30 cents, it's still down to 18 cents or something now. GRT up at 25 cents, is still down at 13 cents now. So they haven't even moved, which means two things. One, money's kind of flowing into Bitcoin, kind of like it flows into the large caps in the stock market for that safety, for the mandates, because there are crypto funds now as well. Or it means that they're really, really undervalued and Bitcoin's been pumping, and then next is what comes with this. So really we need to pump off here because we're on a support level right now, support, and we are actually showing a bit of bullish divergence. So potentially we could have a bit of a move here, but what's the volume telling me? Volume's not looking too bad as well. So yeah, I'd want to see, there's a, if you're a bit of a risk taker, you could have a crack right now, but ideally we need to see it get above that zone. Because as you can see, look, support became resistance. So market structure changes back above there again there. So yeah, really want to see if this starts to play out here, if we start pumping up here. If we don't get back up that zone, that's my target. And that is where I will be looking to most likely go long on a bunch of alts as well. Or I'm expecting a bit more of a move there. So yeah, that's others dominance. Then what I look at is USDT, USDC.D, and DXY. Those two there are your US dollar, like if you're selling your crypto, you go into that. So they're your stable coins back to the dollar, and then your DXY is just your USD. So looking at them, and again, and you know how I showed you all those bearish divergences on Bitcoin and weakening trend? Look at what you're getting on the tether dominance. You're actually getting the opposite. You're getting double bottom on bullish and bullish divergence off your volume as well, increasing volume, buying pressure coming up. So it's actually showing, see how it's got the flip, the opposite. So this is showing that actually big money is actually going into this more right now at this zone. The thing that's really interesting is that this whole move happened back when the banks collapse and when the USDC, the fear of the unpeg. There's that chart. Let's show you, that's tether dominance, which is one stable coin. That's the biggest one. The next biggest one is USDC, which is the one that people were scared of, the fear of collapse. USDC dominance. Look what that one had been doing the whole time. This one had hold support. This one had been dumping. Where was money? Money was exiting USDC, going into Bitcoin. All right, from that, it's now showing support. It's at a major support level now. Also showing bullish divergence. And again, even the volume can see even coming down lower environment, it's found support here as well. So from that pivot to that pivot, you got double bottom OBV, lower low price, bullish divergence. So, but again, showing the weakening, need the price to confirm it. How does that happen? Above there. Why there? Support became resistance. Higher high, higher low, we would get a change in microstructure back above. So what you would find is if Bitcoin dumps and then this pumps up and then this breaks this red zone, then that's when you go bearish really, really quickly. That's that confluency I'm talking about. You're getting it from multiple charts. You're not just looking at Bitcoin, you're getting multiple charts showing you why you should go long or bear. Okay, so that's the kind of thing that you're looking for. But the interesting thing is that money's been flowing in from USDC, not from Tether, because of that fear of collapse. And again, USDC, if you know anything about your stable coins, that was the one that was actually used by your institutions for mostly a lot of your DeFi and stuff like that as well. And if you're in your DeFi, you're not even on exchanges, you're often using some kind of DEX as well, where you can't even take it out into, you can either go to Tether or you can go to Bitcoin. So they didn't have much of a choice. It was go to Bitcoin or go to some kind of altcoin or Tether. But if they're scared of USDC, they're probably then scared of Tether as well. So yeah, things like that, you gotta think about that. All right. So yeah, but at the end of the day, if we break that red zone, bearish. If we break this zone here, that would be very bullish for crypto. So at the moment it's sideways. We need confirmation, but looking at our indicators, you can see bullish divergence, increase in volume. It's looking more to that side, but it can change. So we need that price to confirm it. Can I please the link, as I have to leave, but really want to finish watching? Yeah, hit up whoever gave it to you, Justin. All right, so there's that one. Next one I want to look at is DXY. And you know how I talked about being a contrarian investor or trader, is what's everyone talking about the US dollar right now? It's going to zero. It's been, there's a new thing coming out. It's so bearish right now. And isn't that funny how quickly a narrative can change? Because up here, everyone was raving about the US dollar. The news had fed you the media that everyone get into the dollar. Then now they're feeding you the opposite, that everyone that it's going to go to zero, that it's been going to get taken over, but it's no longer going to be the world currency. But this is why charts are important. Let's go to delete all that. Where are we? We are at a major, where resistance is becoming support. Okay, it's becoming support on trend support right there as well. And same thing happened here. Resistance, sellers became buyers. Sellers have become buyers. Are they going to become buyers now? Let's see. Let's dive a bit. That's the weekly, daily. Let's delete that now. So what I'm seeing here now is you have got bullish divergence. So double bottom, higher, low RSI. So potential move up. What I'm really looking for is a break out of here, because that is what's called, what I'm looking for there is you got wave A, B, and then 1, 2, 3, 4, 5 is ND diagonal, expanded ND diagonal there. So it could be complete there, but the confirmation of it would be above there, because then we have a higher high, a higher low, and we break above there to change market structure. So if it can get above $102, you've got a change in character. It then starts to turn bullish. All right. So yeah, that would be a sign that the DXY would start to pump up. As you can see, it got sold off right now. So yeah, it needs to get above there. And then you can see the resistance here as well to pump up there. So yeah, looking for that. And then if the DXY goes up, Bitcoin often goes down as well. Again, getting that confluency. So, but if we roll over and if we break below this major support, as you can see, it's been a major support. We break below, then that would be really good for the bull, which would also, you know, have Bitcoin's at that really key resistance right now, would probably correlate with that breaking through there. So you can see why we're at such a critical moment right now, how, you know, all the different charts are intertwined. All right, NASDAQ SPX. So what this shows is the NASDAQ compared to the S&P 500. And if you think about it, most of the stocks in the NASDAQ are in the S&P 500 as well. You know, Apple is in both. Microsoft is in both. So a lot of the big boys in both. So what this is doing is it's cutting out those ones, and it's really looking at, you know, kind of like your technology against your things like the banks and your consumer staples and, you know, your Coca-Cola and stuff like that. So it's showing more of your high valued tech against your more traditional value plays. And if you look where we are right now, who knows what that is right there? That's the tech bubble. So back when the ratio was up this high, we were in the tech bubble, which is when equities were extremely overvalued, which is when the Shiller PE show was extremely overvalued, which is when the resistance of the chart was up at the high, which is when the Dow Jones, the gold Dow Jones ratio was at the low. See how everything's kind of in, where are we now as well? We're at that same point on the ratios. So this is showing that the last time we were up here, this is a ratio. This can't keep going up. You know, it can only go so high and so low. This is showing that the majority of the stocks, the NASDAQ is outperforming the S&P 500. What have we done here? We've had a double top support and we're back at that neckline now. So we need to see, will it break below? If it breaks above this level, then it's negating that neckline, and then that'll be a really good sign. If we reject, then we've got a long way to go. If go to where I'm actually looking, your long-term trend. You know how I always talk about confluency and getting multiple things looking at each other? So you got a long-term trend line. You've got what was resistance became support. So a big horizontal support, and you've got the Fib 500. So if we were to drift down to here, that would be the zone where I would expect this ratio to start going back up if we break that low. So that's the kind of thing, because right now, if you look, we're still in this trend, still in this uptrend right now. So as you can see, it bounced off the support. Again, this is a ratio. This is a NASDAQ and it's bouncing off a support level. See how all the markets are so intertwined and like that, you know, that's crazy that a ratio is bouncing off a support level, that a ratio has a resistance and a support. This is what I'm talking about, how, yeah, all the markets are so correlated and yeah, it's just, if you've seen what I've seen, you would, yeah, you'd look at the markets a lot different. So what I'm looking at here is if we break that low, that is my next point down there where there's a massive confluency, and that's the long-term trend support. But it needs to reject that resistance. If we get above there, then again, that could align with breaking all those, you know, breaking below the support of the dollar, breaking above the resistance of Bitcoin, you know, these kind of things. So good question, Chrissy. How does this relate to Bitcoin? So Bitcoin has always followed risk on assets. This is showing you when this is going up, risk on environment. When this is going down, it's a risk off environment. So as you can see here from the tech bubble, it's been a risk on environment, up. The NASDAQ's been outperformed. So this was the tech bubble, and then the NASDAQ got absolutely smashed. It dropped like whatever it did, 80% in 3 years. It bottomed. And then from there, the ratio's been going up and up and up. And then as you can see here, this is November 2021. It double topped on that bearish divergence I've been telling you about. See, lower low indicator, double top price. and then it broke below the, and a double top is a very common reversal pattern. But the minute that we get above the neckline, it negates it. So that's why it's critical to get back above that zone. So at the moment, this has been going down, which is showing risk off. So that's why I look at this chart, because it's showing a risk on environment to a risk off environment. And for Bitcoin to thrive, you know, Bitcoin was only created in vertical line. Where was it? Here. So when Bitcoin was created, we've been in a risk on environment. We've had low interest rates. We've had pretty much free money. They've been printing money out of their ass. So yeah, it's been in perfect conditions. It's only been in that kind of, it's never been in a tightening environment. So that's what you've got to be careful of, is that if we do keep rolling over, then Bitcoin's never been in that environment before. And this is why, again, looking at those cycles I've shown you, how I believe we've actually had a cycle top on Bitcoin, is that if we do start to roll over here and break below, that's a risk environment. Bitcoin's never been in that environment. You can see how things are, or possibly could be different if we break that low. We break back above there, we're back in a risk on environment. We're good to go, which would also align with those key levels, which is why I'm saying I'm bearish until proven otherwise. But if we get above those zones, all these kind of charts align with it, I will flip back to being bullish again. But until then, just going off those macro things I've shown you, going to where we are. Last time we were up this high, we got smacked. We're up here again now. We should get smacked again. Even though, that was the .com era when, anything that had .com in its name went ballistic. Times have changed. I'm not expecting it to go back to this level, but the trend says it should come back to this level, which would still be, twice as far as there before. So yeah, I'm in MC. Just wondering how much time it took you to learn all the basic stuff along with market cycles and how. You know what? It depends on your kind of passion on it as well. Like for me, if you were to tell me, go and study something about, I don't know, butterflies or something, I have no interest in it. So I would really struggle to lock down and do that. So it would take me forever. But for me, because I've kind of grown up with my dad and stuff, I've always been exposed to this kind of stuff. I've always been kind of around it and kind of understand it. And but the actual learning of it, if you just do a little bit each day, you'd be surprised at how quickly you pick it up. You can pick it up really, really quickly, but you've got to really enjoy it. If it's really like anything, it can sometimes be forced in the beginning because it's new to you. And like anything, you don't like doing things out of your comfort zone that you're not good at. People don't like doing things they're not good at. They like to stay in their comfort zone. They like to go and do just the things that they're good at because it makes them feel good. But you don't grow as a person if you're just doing the things that that you're good at. You got to get out of your comfort zone. You got to go and do. So yeah, that's really the key to it. One, you got to try and get into it, but you got to try and just do a little short, sharp, but often. So if you just do 10 minutes a day, every day for a year, you'll be surprised at how quickly that you can that you can pick it up. All right. Last one. Oh, the VIX is another one. Oh, so we've broken below, have we? Oh, look at that. We've broken below the trend, which is good. That's a good sign for the bulls. But we are coming towards a support level here. The only thing, and this, I talked about this with the MTC guys as well. If you look back at the GFC actually did the same thing here as well. See how it was in this trend and it broke below the trend. So, because that trend technically wouldn't be there. So it was in this trend and it broke below, and then you actually had then the GFC. So just got to be careful. If you know about the VIX, what that shows you is your capitulation moments. And this is when fear goes really, really crazy. And if you look at that, there is the COVID bottom. So that's when everyone went, oh my God, the world's ending, capitulation. We bottomed. That there is the GFC bottom, capitulation, lots of fear. All of these points here are all of your major market correction bottoms. The 2010 bottom, 2011 bottom, 2015 bottom, the 2018 bottom, which is when they first tried to tighten before. If you look now, we haven't actually hit this bottom low, even that there's the tech bubble bottom. So we haven't actually hit that capitulation moment here yet. It's been contained this whole time. So that's another thing that's, that's a little bit scary, is that capitulation. We haven't had capitulation yet. The VIX has been contained that whole time. So yeah, this support level will be a big one to see if we can break below that. That would be a good sign. But if we double bottom off here and then start to roll up, again, looking at RSI when we're down at this level, you get some kind of movement as well. So just got to be careful. We're down at a zone where fear might start to step in as well. But it's broken that support, which is a really good sign. The last time we were down at this low, that there is when the bear market began. Look, this is January 2022. So this whole part here is the bear market. So you can see it's been going and we've broken below that. So yeah, it's as if the bear market didn't even begin where we are in fear. So yeah, that in itself is pretty crazy. But if we get back above there, that would definitely be a sign to worry about there. I've gone through the bonds with you in the yield curve, talked about that to begin. The other one I want to look at is, I've shown you how gold is potentially about to, from the ratio, outperform equities. So looking at this here, we were going to see, okay, how's gold going towards Bitcoin then? So if we look at XAU BTC, you can see here, gold has been absolutely horrendous compared to Bitcoin. Find out, and then you can see it's going down, and then it's actually changed market structure here. So higher high, higher low, double bottom, broken the neckline, testing that neckline as support. So again, we're at a critical level, like I've been talking about. If we break below this green zone, that would be a very good sign for the bulls, because you want Bitcoin to outperform gold. If this goes up, gold is outperforming Bitcoin. If this goes down, Bitcoin is outperforming gold. So the thing is, it has actually come down and filled this gap here. I've shown you guys about the gaps, actually to the T as well. So, and it is doing it on bullish divergence. So lower low price, high RSI. So again, it's showing weakening trend, but the confirmation is back above that green line. Support became resistance. The minute we get back above that zone, it is showing gold will outperform Bitcoin, which is that. So yeah, oh yeah, good point, Steve. There is a gap down here as well to keep an eye on. So gap there, which also aligns with that major resistance as well. So yeah, there could be a chance for a bit of a rollover down to here as well. So got to keep an eye on that. So that's why I'm saying price confirmation is really important. You need it to get above that green zone. Until then, this thing could keep diversion and this price could keep coming down to this kind of zone. So yeah, back above that zone there, and that would confirm, boom, gold to outperform. So that's pretty much it, guys. That's kind of what I do. I unpack Bitcoin. We look at confluency within it itself, and then we look at the big picture of all the different relationships of all the different charts, and you can kind of see, and can you kind of see how, oh, look, that one's at a major support, that one's at a major resistance, and you can kind of see if these things break, boom, we go bullish or we go bearish, and you're getting that confirmation from multiple charts. And that's the key, because it really takes away that human error, because you can look at one chart and you can make a mistake, because we're humans. You can get that confirmation bias. So if you're, because you're looking at it like, oh, I don't know, but when you're looking at multiple charts that all have those relationships, it really eliminates that and it helps you decide where it's going on. So yeah, you can see why this is a really key level. And if we break that, I would be pretty bullish really up until that 35K zone. So, and then I'd be looking to see if we get some kind of weakness there. But so yeah, if you loved what I did tonight, guys, hit up whoever invited you, and yeah, and they can follow you on if you're interested in learning more. And also, we're doing a big workshop in Sydney next weekend as well. So if you want to kind of, if you're looking at all that stuff going, what the hell is he talking about support, resistance, trend lines, etc. Pretty much everything I've gone through tonight, we will teach you in that weekend workshop. And then if you're an experienced trader, I'm going to be going through advanced strategies as well. So, you know, looking at a trend line, what are some advanced strategies to help you know when that trend's weakening or getting stronger and things like that as well. And your candlesticks, you know, people look at a candlestick and think, oh, that's a bearish engulfing. There's so much more to it than just the picture of it. So there's a lot of things that you can use to really unpack it as well. So yeah, looking forward to seeing anyone there.